Hi. So in this video, I want to talk about how far this rally could go because we have some nice structure here on the S&P 500, a bunch of equal highs right here, and there's no bias here. Okay, so I'm actually looking to whenever there is not right now because we're at the top here. If it just goes instantly, well then whatever. But I see a really good trading setup here potentially. What I'm looking for is I'm looking for one more pullback if we get it. There's no guarantee that that happens, but if it was to happen, I'm looking for a good risk reward for a sweep of these highs. Why? Because again, this high, and this high, they're very close. Okay, so the short sellers have their stop loss and liquidations above, and I don't think it's going to be as easy as just doing a support resistance flip right here into this. Okay, I don't think it's going to work like that. So I think we're gonna squeeze above these equal highs by a few percent, very likely. Um, Again, from where we are right now, there's probably another 5-6% upside, and this shouldn't surprise you. Again, this is consistent with previous bear markets, right? What I'm referring to is, let's say we were to go to 56.50, okay? What's so special about this number? I don't know when it gets here. Again, I'm looking for a trade somewhere in here whenever we get a pullback if we do, right? We'll see where we put the stop loss and shit. I'm not gonna share a trade here, and I don't post stuff on Twitter right now because I'm taking a break from Twitter. But I'm looking for something like this. Uh, Everything is a probability. Now I'm gonna explain why I'm looking for this and why there is no bias when it comes to this. You might go, "Oh well, you're really bearish. Why are you bullish?" No, again, guys, just trading the chart. Okay, I don't care about any narratives. I don't care about why people think it did what it did. It doesn't matter to me. Okay, I think there's a good chance that it goes to 5650 to 5700. Everything is a probability, so I would assign maybe a 70% probability to this that it's gonna go up to here. Okay, and again, this shouldn't surprise you because if we go to the S&P 500 and look back throughout history, right? These previous lower highs in recessionary bear markets, again, this overall decline in 2007 to 2009 was 58%. But the lower high we got was 8.5% away from the all-time high. Okay, well that's equivalent to like 56.50 on the S&P 500 right now. Okay, what about right here? The first move down here was 18%, and then we bounced back up here, and from, let's say, the all-time high, this was around 11% away from that, right? Now there are times where you make equal highs, like right here. Look at what we did right here, equal highs, and we don't sweep them. Okay, so it can happen, um, which is why it's just a probability, all right? But it wouldn't surprise me at all if the S&P 500 goes to around 5,700, 5650, 5,700. Same thing right here. You see this first move down in 1974, right? And then we bounced back up, and then the lower high was 7.5% away from the all-time high. So you've seen it, 7.5% here, 11% in 2000, and 8.5% here. Okay, so like getting a lower high, let's say anywhere from getting a lower high. I guess we have done this, but again, it's a probability. You saw in 2000 in the dot-com bear market how we didn't sweep the high. And I don't care if it does this. It's fine if it doesn't. And if it goes beforehand, well, then it's already done this. But again, I see the possibility of this, and I pointed this out in my last video I made about the market when S&P was around right here. Well, it wasn't over there. It was right here at like 52.20 or so. You can go back and look at that, and I said how it's possible that you get a bear market rally up to here, and it's consistent with previous bear markets, right? So again, if you were to repeat the previous bad times, uh, you could get a bear market rally from here that looks something like this, and then maybe we curl over, right? I think something like this is what's gonna happen. Okay, but again, it could just go lower right now. I'm just looking at it from a trading perspective, and there is really no bias here at all. Okay, what I want you to pay attention to though is if we look at the Dow Jones. Okay, this is the worst month in the Dow Jones. So since 1931, 1932, you can see this drop in April was 14%. So it's the worst April in since the Great Depression. Okay, we have never seen this in any April. Okay, here it was not April. April wasn't bad here. April wasn't bad here. April wasn't bad here, and so on. There was one that was pretty bad in 1970, right here, down 10%. But the worst one that we have seen occurred right here. This was 18% down, and then the one before that, well, this one before this, or I guess after actually, yeah, here. This was the worst one, which was 26% down in 1 month in April. So it's the worst April in the Dow Jones since 1931, 1932 during the Great Depression. So don't let this distract you from the big picture. Okay, I'm very high time frame bearish, but I just think it's possible that we go to around 5700, 5650 to 5700 because of the structure here. It's the same reason why I'm bearish on the Nikkei here. And there's no bias here, it's just probabilities. So I think we're gonna go below this, right? And this is the exact same logic as on the S&P 500 with its equal highs. But again, everything is a probability, okay? So I don't know whether this is gonna happen. I'm just looking for a good trade, and I think a good trade is in play soon. So there's probably going to be a narrative if we were to do this, if we were to go to 5700 in S&P, 5650, 5700. But again, doing this, rallying up to here, is consistent with previous bear markets. 1974, 2000, and 2008, they were 50 to 60% bear markets. So it's just a trade. I think it's going to result in a lower high, and then it's going to collapse, okay? And I do see it eventually going down here at some point in 2026, 2027. And if it's really bad, this is like the worst case scenario that I see, below the COVID lows, right? But again, it can easily look like this, where you literally just do this. Right? So this is important because GDP is still minus 2.2%, guys. We have deflation, for the first time since the last couple of bad times. CPI month on month. Deflation. Marked the first decline in consumer prices since May of 2020. Okay? Same thing with the PPI. Look at the PPI. Deflation. So, yeah, things are bad and so on, but the rally could continue for a bit here, and it could last for a few months. And again, you don't have to take out this low. You could, but you don't have to for a long time. Eventually you will. But what I'm saying, well, I believe so at least. But it could take like half a year to, I don't know. Let's see in the past how long it took to take out the low sustainably. 195 or 180 days roughly. And then before we capitulate the 250 days. What about in the .com? 2 months. 2.5 months. But we're still hovering around there just beneath for like another couple of months, over half a year. So it's normally after the lower high is put in, which would be around 5650, 5700 S&P, that you get this, right? So don't get excited if that happens. You're just falling into a trap. There's going to be a narrative probably assigned with it too, and it's just there to wrong foot you. Same thing right here. This is what happened after the lower high. This is what happened after the lower high. So, it's very possible. We go up to 5650, 5700. And then we do something like this after. Right? Just so you're not surprised. And bear market rallies are epic. Again, you're on the bad lists. Just keep this in mind. Yeah. The rally that we got on the 9th of April is up here with the Great Depression, COVID, the global financial crisis, COVID, Black Monday 1987, etc. Right? Same thing with the Nasdaq. You might get excited because we're number 2 on the list here, right? Look at this massive bounce. Okay, so what is number 1 on the list? 2001, 01, 03. All right, was that a good time? Well, let's see. The 3rd of January 2001. That's right here. Okay? So massive bounce here, right? From where that candle closed. The market still went another 68% down. So I wouldn't get too excited, guys. And gold and everything should go down with the market. I mean, it did the same thing in 2008 as it's doing right now. Let's just go back and look. The S&P 500 peaks right here in October, and gold peaks in March. So gold runs up for another 5 months or so, and it goes up another 40%. Well, actually, it's more, 43%, right? And then it goes down 34, or I mean, yeah, 34%, and silver 61% down. So it's not unusual what we're seeing here. Same thing with the divergence between the Nikkei and the S&P 500. You can see the S&P 500 here in red made a higher high, while the Japanese stock market in orange made a lower high, just like before here. S&P made a higher high, while the Japanese stock market made a lower high. Yen carry trying to unwind here in August, just like we had in August last year. So, and just because I'm like giving you a very strong probability of a bounce that could last for a few more weeks. I don't know if it's gonna happen. It's just a probability. It's not a prediction. Okay, I think overall the stock market is gonna collapse, but I like trading equal highs and equal lows. So if there's a good setup that presents itself, I'm gonna take it. There's no bias here. It's just a trade. Okay. Now, uh, what else? Yeah, again, just keep in mind where we are in the business cycle. What does this look like to you? It looks like the previous bad times. Fed funds rate going down in red, unemployment going up in purple, stock market down. Same thing right here. Same thing right here. Same thing right here. Same thing right here. Okay. So this is not over until unemployment spikes and Fed funds is very low. Right? Same thing with the yield curve if you want to look at that. So just if there is a short-term bullish play, it doesn't mean that things are over. Right? It's the exact same thing here. Yield curve up, unemployment rate up, stock market down. Yield curve up, unemployment rate up, stock market down. Yield curve up, unemployment rate up, stock market down. Yield curve up, unemployment rate up, stock market down. Yield curve up, unemployment rate up, stock market down. So I don't think this ends in any other way. It's gonna end the same way it always does. But it doesn't mean it can't go up in the short term, right? So unless you take out the all-time high, you can go to 5650, you can go to 5700, changes nothing. It's the exact same as what happened in 1974, 2000, and 2008. Everyone's gonna get bullish there. There's gonna be some stupid narrative. We're back and all that. They're just ignoring everything. It's gonna be perfect exit liquidity for people who are not getting out because of tariffs, but because of recession, right? Which we know, based off this, is not looking good, boys. Same thing with the unemployment rate, and to make it more visual or easier for you to visualize, just look at the unemployment rate in purple. Okay, that's all. Peace.